Right. So thanks for joining this webinar as well. We've connected again to cover some of the parts in chapter one. And in terms of what we covered last week, we spoke about the beginning parts of chapter one. I think the first 1/3 of chapter one was actually covered. We spoke about introduction to econ, right? Which was these areas. So we have covered the introduction to economics or foundation of economics parts. And then we've talked about what is macroeconomics, microeconomics. And then we spoke about positive versus normative statements, needs and wants, economic versus non-economic goods and resources. Factors of production was quite long. So we finished that part, right? And today we have to do the central problem of economics part. Okay, so what we are doing essentially in this set of webinars is we are putting the short notes, right? I think last week also I told you, right? Getting an A for economics is about following a process. As long as you follow that process, you will be all right end of the day. So what is that process, right? You start off with your theory parts, and that is basically your tunes and your notes and all of that. But because you can't really by heart all of this, you actually need a good set of short notes for you to remember. And from there only you actually move on and do your past papers. So make sure you do past papers as much as possible, paper 2 and MCQs. Both of these has to be done. This is basically what's going to prepare you for understanding what are the different questions that are going to come. So today, as we go along, last week also we did quite a lot of questions. Some are like different kind of questions also. Today also as we go along, we will look at doing at some of the questions. So main perspective or main motive of these webinars is to do a theory summary, like a recap of the theory, and not go into too much detail there, but do a good recap of the most important parts of the theory, or pretty much everything actually. But after that, put up a good short note. That's the first perspective of the webinar. And then we will move into the past papers part as the second perspective after that, right? So these are things that you have to use if you are going into model papers after this. So what you're supposed to do after this is to move into the model papers, model questions, and attempt as many model papers and model questions as possible, because a lot of these downloaded from the website itself. And then you have to use this to basically prepare for term tests and things like that, exams. So this is your process, and you have to finish this process for all 12 chapters that are there in economics. Only then will you be, at that place where you can score that A, plus even more than that, right? 90 marks or whatever it is. We need to follow through on this, right? And also learning to write essay answers. Just because sometimes you know all of this also might answer MCQs well after that, because you have good thorough knowledge and thorough this thing. And essay answers also, you'll probably know what are the things that should come. But you should practice writing essay answers by putting up skeletons on how to write these answers, and then writing as many essay answers as possible in terms of the models, right? So we will come to that part, those parts later down the line. But what we are going to focus on right now is this part, because this part is covered in the class, done. This part I'm going to cover in the webinars. This part we will come again after this to cover for the past papers. Okay. So last week we put up the short note. We have done the foundation of economics part. Micro, macro we spoke. Positive, normative we spoke, right? And then we also talked about needs, wants, resources and goods. Economic versus non-economic resources, economic versus non-economic goods, renewable versus non-renewable resources. Okay. And then we spoke about factors of production, land, labor, capital, entrepreneurship. And we have summarized land, labor, capital, entrepreneurship as well. Until productivity, we actually spoke about it. We also talked about a lot of questions, right? So today we are going to proceed from this point onwards and cover the next important section, which is economic systems, which is obviously in every paper. If you see, at least 1 or 2 questions basically comes from that. So we're going to talk about that right now. Okay, so we can start the same tute only from last week also. So you don't have to have a new tute for this basically. It's more or less the same tute. For those of you who don't have it, you can download it from this website, events.advi.lk, if you don't have it. And for the class students, it's anyways you all already should have it because the printed version was given to you guys. So people who don't have it, you can go and take it from that. Okay, right. So I'm recording this as well so that I can convert this to the video for you all for later use as well. So just gonna open my tubes and this is open. Short notebook open. Here. Okay, so in this section, we are going to talk about, we're going to start off with central problem of economics, because the previous section actually covered the first three sections, right? The foundation part, and then the needs and wants part, and then we also spoke about the factors of production part. So what is economics now? What have we studied so far? What have we looked at in the previous section, right? We've talked about economics being the subject that talks about scarcity. And I think in the previous section, I already told you what scarcity was. Like an intro, I actually gave it to you. If you take in today's world, okay, we have two basic problems basically, right? First and foremost, if you take humankind, right, the needs that we have is unlimited. We want all the sorts of food that is there. We want all the sorts of clothing that is there. And every day also we are inventing new things. So first and foremost, our wants are unlimited. That's the first problem. Okay. And then the second problem is now if we have unlimited wants, at least if we have unlimited resources in this world, then fine. But the resources that we have with us is actually limited. So that is what actually results in this problem called scarcity. So I technically should put, I think, the arrow the other way around, right? In terms of our issue of there being unlimited wants and our issue of there being limited resources basically leads to that problem called scarcity. Okay. So what is scarcity? If we ask a definition like that, you should be able to say this one: inadequacy of resources or insufficient resources. We'll make it simple English. So let's say insufficient resources at a particular time to fulfill unlimited wants of the people of a society is called scarcity. That's your definition. So there are two things that scarcity is dependent on. One is limited resources. Let's just say limited resources, right? And unlimited wants. So the next question or that concept of will scarcity ever have a solution? Right? Will scarcity ever have a solution? Echo, we have to find a solution for this one. Or we have to find a solution for this one. Do either of these ever have solutions? Unlimited wants will never have a solution because people are always greedy. And if you really want to limit unlimited wants, what you have to become Thanos. In Marvel, he comes and snaps his fingers. In that movie, he snaps his fingers and half the universe's population dies. Yeah, basically we say Thanos was actually an economist, right? Somebody who talked about scarcity and wanted to end scarcity in the world. So you can't end unlimited wants. There is no solution to unlimited wants. You can't kill people, right? You can't kill half the people in the universe. You can't do that. And second, you can't ask people not to be greedy. And third, you can't ask people not to have wants also. It will always keep increasing and it will always become more and more diverse. So unlimited wants never has a solution. Limited resources also doesn't have a solution end of the day, right? Because we have only one earth right now and the amount of resources that are there in this earth, okay, is limited. There's limited water, there's limited food, there's limited, trees, there's limited, everything is limited. So then comes the next question. Okay, so what if we find another earth? We are doing space exploration. What if we find another planet that we can actually, humans can get into a space shuttle or whatever and move to that other planet? Then can the limited resources problem be solved? If we ask a question like that with regards to scarcity, if humanity finds or builds something in Mars, and if we settle a habitat in Mars, a problem of limited resources will be solved. No, because with this amount of limited resources we have in the earth only, already we have this much of unlimited wants. Okay. The moment we have another earth, our population will multiply and the wants also will multiply even more. And there also will have another problem of limited resources once again. Temporarily, we might have some more resources, but in the long run, we will always have limited resources only. So scarcity will end only if one thing happens. If humans die, only if all the humans in the world are gone. Right now, we talk about like stereotypical like mass killers, basically. Scarcity will not have a solution. Okay. So the other problem also is that you need to understand there are two things. There's something called shortage, and then there's something called scarcity. So, right, the difference between shortage and scarcity. Shortage means short term. There is a solution for shortage. Like for an example, now all of a sudden, let's say there's not enough petrol because of some war that has broken out or something, right? Shortage of, let's say, stock. That is short term, right? And if as soon as the petrol comes, basically, there will be a solution, right? Shortage is short term, there is a solution. Whereas scarcity is a long term problem that we have and it does not have solution. That is why economics is the subject. The day scarcity has a solution, economics, the subject called economics will come to an end, right? Therefore, the subject of economics will never come to an end. Why? Because scarcity will also never come to an end. Why? Because humans are not going to end anytime soon. Probably at the very end only it will happen. So, okay. And if we ask another question, okay. Okay, so scarcity means limited resources, no, right? Fine. What if like if it's a very developed country like America? I mean, they don't have limited resources. They have money to buy anything they want. Then US shouldn't have scarcity. If we ask an MCQ question like that, in a developed country, there won't be scarcity. That is also wrong. Because whether it's a developed country or a Pichakara country like, Somalia or Sri Lanka, whatever, doesn't matter. Right? Pichakara means like a big. Actually, Somalia is better than Sri Lanka, to be very honest. Ethiopia is also better. Like back in the day when we were small, they used to feed us saying, children in Somalia are dying, so don't waste your food. Now they are feeding children in Somalia saying, children in Sri Lanka are dying, don't waste your food. But point is, whether it's a developed society or undeveloped society, whether it's a rich country, poor country, doesn't matter. Scarcity is common to every society, right? It does not have a solution and it is common to every society, right? So there are MCQs in the past when we are looking at past papers, we will see, right? More or less, you will see that scarcity is, you will see this question saying in developed countries isn't scarcity there. One very important point for you to remember is scarcity is common to every society. That's another important point. So then that's about it with scarcity. Okay, so now you know what it is. It's a long-term problem. There is no solution as long as humans are there. Be there. Done. Then we come to the problem of alternative uses. Now, what do you mean by alternative uses, right? We are saying, right, because the resources, that are scarce. Now, for an example, if you take a tree, right? If you take a tree, you can use this tree to do multiple things. You can actually decide, right? Or let's say, it's easier if I just take the mango example here. Let's say this is a mango, right? And you are there. Let's say this is the Roo, a boy called Roo. Okay. So this mango will have, he has only one right now with him, right? He has plucked it from a tree. Basically, he has one mango right? There are, since the number of mangoes that is there is very limited, right? First and foremost, we can utilize this one mango for multiple different reasons. For an example, maybe we can make a mango juice out of it. Okay, so that becomes juice, sorry. It becomes one of the options. Alternative uses means what are the different usages that we have from this mango. So one is mango juice, right? Maybe another one is mango curry. We can make it into a curry, right? Or we can either probably make it into a chutney. What are the other uses, man? What else can we do with mangoes? Maybe eat it as a fruit. That is also one of the uses, right? or maybe you can make jam out of it or acharu out of it, or you can cook it. That is the mango curry part, right? Or yeah, so you have all of these different reasons. Yes, these are the different uses. So mango is the resource we are talking about. And because this mango is a limited resource, there's only one that we have right now, right? The alternative uses are only all of these. So we say that scarcity actually gives birth to alternative uses because of scarcity only, because we have a number of resources that we have is one, like a tree can be made into a bed or a cupboard or a table, right? One mango can actually be made only into basically a bunch of alternative uses, right? So that is what alternative uses means. It's like a variety of uses that we have, right? Since the resource is scarce, so I'll put in the short note, I will say, since resources are limited or scarce, basically, the word is scarce. Okay. What happens? The number of users, there will be a wide variety of users, alternative users, basically, for the same resource, right? So then we can say scarcity is the one that gives rise to alternative uses. Now, because we have, this is no need, we can just put it only the thing and keep, right? So because we have now alternative users, because we have different kinds of users, now the problem becomes the choice, right? So I'll say alternative users, I'll put it like this. Since resources are scarce and these resources have alternative uses, this leads to choice. Now, what do you mean by choice? Since we have only one mango right now with us, okay, simple. Since we have only one mango right now with us, we have to actually make a choice. The problem of choice is created, right? So now let's say this boy called Ru, okay? Now he has to decide to use this mango as a mango juice or a mango curry or a chutney or eat it as a fruit. He has to decide one of these. A choice has to be made. Can he make all four? What is required if he wants to choose all four? Let's say he's like, no, I want all four. He has to have 4 mangoes. One to make it as a juice, the other one to make it as a curry, the other one to make it as a chutney, and the other one to eat it as a fruit. He has to have 4 mangoes. But because he has only one, that is why there's only one choice. So that is why we are saying, right? In the short note, I'm going to come back and say, since resources are scarce and these resources have alternate users, this leads to the problem of choice. He has to pick one. Now the problem is the moment he picks one, that is where we come into the next category of opportunity costs. The moment he decides, okay, I want to go with the mango curry here. He picks this. His choice is this. Okay. These are all the choices that are there. So his choice is this. And the moment he does this, the moment he decides this is my choice, he's sacrificing the juice, the chutney, and the fruit. He has let go of all the other 3 options that he has. Those are what we call as a trade-off. As in, I am going to pick the mango curry and I'm going to, because of this, my sacrifice is the juice, the chutney, and the fruit. That is basically what I'm sacrificing. Those are called trade-offs. But we are sacrificing, end of the day, saying that we have to sacrifice this, right? So we come to the opportunity costs, right? Let's say under opportunity costs, I will first put the opportunity costs. Or we can say, let's say, one by one. When a choice is made, all other available users are sacrificed. Within brackets, I'm going to say these are what we call as the trade-off. Okay. Now, when this happens, there is this concept called opportunity cost that we have put up in economics. What is opportunity cost? Now, trade-off means everything that we are losing. Okay. Trade-off means everything or everything that we have sacrificed. But The moment he picked mango curry, right, for this person, Ruth, his second option, let's say he wanted mango juice as his second option, mango curry as his first option. This is his third option, and this is his fourth option, let's say. Mango juice is the second option. Okay. That the value of his second best alternative, that becomes the opportunity cost. You understand what I'm saying? The value of his second best alternative. Why are we taking the second best alternative in economics? Because if you take everything else, there's a lot of things. So if you want to go on and on and on, the list will actually go on and on as to how many choices are there and what are the all the like the cost of all these choices here. So opportunity cost focuses only on the second best alternative. If his choice was mango curry, his second best alternative was mango juice. What's the value of that second best alternative? Okay. So your definition is when selecting one alternative from all the other available choices, which is what I said, the value of the second best alternative that was sacrificed. That is what is called as opportunity costs. And we are saying it is also known as a real cost because at the end of the day, we are losing something actual in life, also called as economic costs, because not always can these are not always calculated when it comes to accounting. Accounting, well, we don't do opportunity cost calculations and all. We only focus on this in economics in terms of what we are actually losing. Okay. And one other thing also is, see, so if you think about what these opportunity costs are, right? We are saying first and foremost, it's not a financial concept, but a real concept here. Because for an example, sometimes our opportunity cost is always not like calculatable in money terms. For an example, now you are sitting in this webinar and waiting. What is your opportunity cost? What would you rather be doing than sitting here? You made a choice to sit in this webinar and to do the short note with me, right? What is the opportunity cost? Sleeping, probably. For some of you all, it will be sleeping. For some of you all, maybe watching TVs or watching reel or watching YouTube videos or something, or watching a movie. This is going to be what you have sacrificed. So the value of your second best alternative is your opportunity cost. That is why we are saying it's not a financial concept, but a real concept, because not everything is measurable in form of money. And the other thing also is, right, opportunity cost is always subjective. Opportunity cost depends on the person. So we call this as subjective. What does this mean? If we come back to the mango juice example, right? This boy chose mango curry no as the first and mango juice no as the second. But if I am making this choice, okay, I am a big mango juice fan. I will go for mango juice as my choice. And probably from this list, eat it as a fruit will be my second choice. So then for me, my opportunity cost is this, the eating it as a fruit. Whereas for that person, Ru, his opportunity cost was the juice. So from person to person also it will change. Now for you all also, some of you all will choose chutney as the first and mango curry as the second. Then mango curry is basically your opportunity cost. The other people might actually choose fruit as the first and maybe some chutney as the second. Then for them actually chutney is the opportunity. So opportunity cost changes from person to person. That's why we are saying it depends on the person. Subjective means it changes from person to person. You know? Yes. Yeah. Okay. And finally, we are also saying there is always an external cost with opportunity cost. Kela, this is something we will learn in chapter 8 again. External cost means whenever we make a choice, there will be some other external impacts also from it. In chapter 8, we will learn, for an example, early morning, if you get up and start digging your garden, for you, that's good. But like for your neighbor, at 4 o'clock in the morning, when you're starting to do some economic activity or something, for your neighbor, that bugger will be sleeping and he will remember your ancestors. Okay. So that is like an external impact. So there are those kind of things also that has to be considered. We'll talk about it in chapter 8, externalities actually. But for the purpose of this short note, we are focusing only on this. So you know now what opportunity cost is. You know the definition for it. And then you basically know that, you know what trade-offs are. And you also know what is the opportunity cost is the real cost, economic cost we have said, and we also know that it's very subjective. Okay. So summary of this central problem of economics is this. This is the basic summary. So if I put the summary, I can put it in the form of this note. You have to remember this, by the way. This thing comes a lot in, like, so many different kind of essay type questions also, right? Mega deal sometimes students don't remember. You have to put this in your short note and you have to remember this, the summary. Look at this. We are saying what is scarcity now. In summary, what is scarcity? Limited resources, unlimited ones. That is scarcity. Scarcity, we are saying, leads to alternative uses of resources. Why? Because resources are limited. Same resource can be used, will be used, or can be used for multiple things. Such as if you take wood, if you take a tree, wood, it can be used for multiple purposes, such as door, table, bed, like that. Multiple purposes are there, right? So if we have to choose, that is when the problem of choice comes into play. And the moment we choose something, the second best alternative is basically the opportunity costs. Trade-off means everything we are letting go. So those are the things that you need to know when it comes to your summary of this. And I will give you a summary for opportunity cost also, right? Maybe put another one for opportunity cost as well. This is a good summary for opportunity costs, right? Where we have said, look at this. This is that mango. So you can take a screenshot of this. I will give you time. Hold on. So look at this mango example that we have explained. If you can remember this itself, you are good to go, to be honest, right? So this is that mango example. Sam has basically, she has a mango, and her options are eating the fruit, mango chutney, mango achar, mango juice, mango curry. We have given her 5 alternative uses. We have given the price of all those 5 alternative uses also, right? Because she has only one mango. That kind of like shows scarcity. The mango has multiple uses, so that kind of like shows the alternative uses. Okay. But since Sam has only one mango, she has to pick one of her options. That actually shows the choice part. So the moment she picks one of these, she loses all the other choices. No, that is the trade-off. And finally, whatever she chose. Now, here, for Sam, we have said eating the fruit is the first choice. Mango chutney is the second choice here. So then the value of the second choice, which is the mango chutney, that's $200. That basically is the opportunity cost. Again, opportunity cost is always not financial. Now, Metana, we have put it as financial. But sometimes opportunity cost also is about the time. And time cannot be measured in money, no, in the form of like absolute values, right? So you have to take that into consideration as well. So this is that part that is okay. Can you take a screenshot of the first part? This has to go into your short note. Most important points are here. Give you 5 seconds for it. Okay. And then, so this has to go into your short note. For the class students, I've told you, put up a short note. All of these has to be there and it has to go into the file also. Don't forget that, so that this is what we are going to use when we are discussing past paper questions, right? And then you can take a screenshot of this also. Please remember this. This is a very important short note because this part usually gets tested quite a lot. And this short note will actually help you a lot when it comes to the paper 2 questions. If you can just remember this flow. Okay. So you can take a screenshot of this as well. This is the summary of the central problem of economics part. Definitely has to go into your short note. Right. So the next section that we have is actually a pretty shorter section. This is called the basic economic problems. Now, central problem of economics is scarcity. Why are we calling it central problem? Because it basically exists in all across the world, across all the societies, all the countries, and it's the central, the first problem that all the humans have. Unlimited wants, limited resources. Okay. Next, we are going to move into what we call as the basic economic problems. Now, basic economic problems, if you take, that's an easier section. So, sorry, I forgot this zero opportunity cost part, right? This is in the tutor as well. There is zero opportunity cost means there are only very few goods in this world which has a zero opportunity costs. Now, in the previous section, we studied something called non-economic goods where we went and said sunlight, and that sunlight has no opportunity costs. So sunlight, air, not the soap, the sunlight, actual sunlight. Those are goods where it's unlimited, right? You just because you use doesn't mean it's going to finish. It's unlimited, right? So then if those are there and you don't really have any other alternative uses, right? Then to be very honest, so if there are unlimited resources such as sunlight, that is basically zero opportunity costs. And to be honest, there are certain examples where we can say alternative uses are not there. For an example, now this rocket fuel, if you take, rocket fuel can only be used for rocket. You can't put it for a car. If you put it for a car, do you think it will go like a rocket? No, it won't. It will burn faster than a rocket first. Then you will go up. End of the day, if that is the target, then yeah, you can use rocket fuel in a car if you want to go up. The car won't go up, you will go up. Yes. But other than that, there are no alternative uses. So if there are no alternative uses, can we calculate opportunity cost? Not really. If there's only one use, and that's the only use that is there, then there's no opportunity cost, right? So that part. And then thirdly, unemployed resources. Now, for an example, if something is like just like in a factory, if let's say you have workers, and if that fellow is just sitting and waiting, that means he's unemployed. There is no work. Can you go and calculate an opportunity cost for that? For a person who's just sitting and waiting? Not really. See, opportunity cost has to come when the choice is done, choice is made. When you're just sitting and waiting unemployed, you're not technically doing a choice there. So you can't really calculate opportunity cost also. Remember this point for PPC. In the next section, we have PPC. Remember that for PPC, when it comes to unemployed resources, you can't calculate opportunity cost. So those are the three areas where zero opportunity cost is there. So I'll probably at that point also here, I'll just say zero opportunity costs. Zero opportunity costs occurs in three different instances. One is where the resources are unlimited, such as sunlight. The other one is where there is absence of alternative uses. And the third one is where if there are unemployed resources. Idle resources, we call it. Okay. So you can take a screenshot of this also. Add this also to the opportunity costs section. All right. Okay, fine. Now we'll move into the basic economic problems, right? So we've summarized that entire section in one page. We'll put that into your short note. This entire section gets summarized in one table. So basic economic problems means simple. Let's cover it in 5 minutes basically. Every problem after the scarcity problem comes across these three problems. What are these three problems? There is something called what to produce and in what quantity to produce it, how to produce it, and for whom to produce it. Right? Three problems, first and foremost. So there's a long theory section here. You can actually read this, right? Basically, the summary of that is this one. If you talk about what to produce and in what quantity, now assume you're AKD. Let's say you're the president of this country. Okay. Let's say these are the three problems that you have to solve as far as your country is concerned. First and foremost, what to produce and in what quantity as far as Sri Lanka is concerned. Firstly, what is our basic need? Food. And out of food, in terms of the wants, the most important want is rice. So if I ask you the question, what are you going to produce? Firstly, the answer has to be rice. And second, what quantity are you going to produce that rice? How would you decide? There are 22 million people in Sri Lanka. Yes. So out of that 22 million, leave the babies out, small ones. They don't eat rice to me. So leave that. I mean, you can give, but then don't know if the baby will survive, right? So leave the babies out. Maybe the remaining 18 million, 17, 19 million people would require rice, let's say. So for their consumption purpose, you have to calculate how much is required. And that is your quantity, basically. So we call this as the problem of resource allocation, because let's say we need for that 20 million, for that 18 million people, we need rice, right? And let's say you calculated the amount of tons of rice for this as some 1,000 million billion tons or something. Now you have to decide how to get this down. What do you need? You need paddy fields. You need corn. You need farmers. You need resources, land, labor, capital, entrepreneurship. Remember, for a business. So you need land, labor, capital. You need those. You need a farmer. You need paddy fields. You need rice. You need the corn to produce this rice. So then you have to decide how are you going to allocate these resources, and how much are you going to use now versus how much are you going to leave for the future. Let's say you want wood and you're starting to cut down trees for wood. Are you going to cut down all the trees and use all the wood today itself? Or are you going to leave some wood for the future? That decision comes in the first part, problem of resource allocation. Okay. Next, we come to the problem of how to produce. Two main methods to produce. Now, in this farm, in this same rice example that we took, if you're the president, there are two ways to produce this rice. One is in the farm itself, we can use a labor-intensive method. What is the labor-intensive method? Giving the farmers, telling the farmers, you all plant, you all put the paddy field, you all go to the paddy field, put the seeds, you all plant it, and then take a bunch of, buffaloes, bulls, like you all basically, and, plow the fields. That is what we call as labor-intensive farmers. Or you can do what America is doing. You can go for capital-intensive. If you take American farms and all, there are not a lot of farmers who are putting the seeds and plowing the field. Who is doing it? Machines, tractors, huge tractors, like, they're so big that, those tractors are like the size of a paddy field. They will go up and down the paddy field, putting those seeds, putting the water and all of that. And now they are so advanced, they're doing it using drones. There are drones that are flying up and down, putting the seeds, plowing the field, basically putting the water and stuff like that. It's crazy. So they are going for capital intensive. Most of Sri Lanka and all goes for labor intensive because we can't afford that. No? We can't afford the capital intensive production. So problem of production is the second. Okay. And the third one is problem of distribution. After we have decided we're going to produce the rice, this is the resources we are going to use. Okay, we are going to use farmers, labor intensive. Finally, we come to the decision of, okay, for whom are we going to produce this for? After we have produced the, the t-shirt or the rice or whatever it is, who is going to buy this? Who is going to use this? For whom are we going to give this for? That decision is based on factor income. Right? We say factor income depends on factor ownership. What is this? Factor income and factor ownership, right? What are the four factors of production, right? So the summary for this is actually this chart. I'll just put it here as well, right? There are four factors of production. You all know land, labor, capital, entrepreneurship. Four factors of production. Yes. Out of that, the factor owners, if you take landowners, are the land owners of factors of production, land. Laborers are the labor owners, capital, and entrepreneurs. If you take the incomes that these people earn, we already studied this in the previous section. Land income is rent. Labor income is wages. Capital income is interest. Entrepreneurship income is profit. Now, the question of for whom to produce, we said depends on a person's income. Now, rice, of course, all four of these incomes, whether you have rent income, wages income, interest income, profit, whatever, you're getting an income, you'll be able to buy rice. So anyways, it doesn't really matter. But think about like high quality, like high priced products like a handbag. If you take, you have these like, posh, like these big, very luxury handbags, Gucci, Prada, and all these handbags are there. Who will buy those? Those are the rich, the high rich class, basically, right? So then it's about factor ownership. The people who are able to afford these Gucci handbag, Lamborghini cars and all, right, are basically not just people who are depending on wages. Labor wages is not enough to buy Lamborghini. Yeah. Badagini can we buy a Lamborghini? Those are the people who basically have a lot of rent income, interest income, and a lot of profits also, because of business. Entrepreneurship is the one that actually gives the most amount of income end of the day. So this is the one that decides who is the one who's going to buy. People with the most amount of factor income will be able to afford everything. People who have less factor income will not be able to afford a lot of things. So that is basically the problem of distribution for whom to produce. That's it. That is the summary of this section. So you just have to remember this part, and that's your basic economic problems part. Okay. You can take a screenshot of this and you can add that to the short notes. So when you're studying for past papers, okay, because that's the next section that's going to come in, you have to study the short note primarily. This is like a summary, it's like a super summary of whatever that was given in your note and whatever that was given in your tunes, basically. So as long as you can remember the short notes, you're to a certain extent safe. Okay. Right. So next we move into the next section. That is, we will move into the next section, which is solving the basic economic problems. How are we going to solve? So there's a bunch of questions, I guess, for today as well, right? I think in terms of like the central problem of economics, you can, take a look at these questions. I mean, these are simple directly from this thing. But what if a question like this comes? If resources were unlimited and freely available, there would be no subject called economics. Explain this statement. Do you agree? If resources were unlimited and freely available, there would be no subject called economics, Kela, we are saying. You have to start off with a definition for economics. You have to say economics is the subject that studies what? Scarcity. The relationship between scarce resources and unlimited wants, end of the day. Right? So if economics is the subject that studies the relationship between these two, right? What will happen if all resources were unlimited? If resources were unlimited, right? There will be no such thing as scarcity. Agreed? There won't be something called scarcity. No? And if there is no such thing as scarcity, there is no requirement for economics also. If there is no scarcity, there will be no subject called economics. Because economics is about scarcity. Right? So this is correct. You have to give the definition for economics, give the definition for scarcity, right? And then you can finally say that there will be no subject. So obviously this is not going to happen, right? But this is like one of those questions that can come where you need to know how to answer it. So always like, and when you're writing answers, we'll cover this separately also. Start with definitions if you can. Try to understand what are the things you understand in the question. Start with the definition and then link the answer. We'll talk about these in the past papers when we are discussing, but writing essay answers for economics is the most important thing. So in classes, we've already started that. Let's focus on it, right? Okay, so coming to the next section, which is the solving the basic economic problems part. You have to study first and foremost before we come to economic systems, right? What is an economic system? We are saying it's an institutional framework that is made by people. That's the definition. Just say framework made by people, right? To solve basic economic problems. You can say like that. Actually include the institutional framework part as well. This is your definition. Basically, what is an economic system? Those are the things we have come up with in order to solve our basic economic problems. Okay. So before that, we need to study what are these elements of economic systems. AK summary ka gahagamu daggala, like just like how we did a summary for this one, right? Elements means what are the parts of this one. So this also sometimes, comes in questions. So let's quickly say households is the first one, right? And then households ganna kotta thing, if you take what are households? A group of people living under the same shelter and sharing a common budget. So we can say group of people in same shelter with common budget. This is what you call as a house. Okay, so like the houses you are living. There can be nuclear families, extended families, we are saying all of that. one of the important things is you have to say they are the owners of the factors of production. So these are important points to remember. I'll just put the most important points because then you can use these points for any question that comes from this section. Because otherwise it's too much to memorize and read. So group of people in same shelter with common budget, they are the owners of the factors of production, because land, labor, capital, entrepreneurship comes from them end of the day. Think about it. You're the laborer and you're the one who's going to work in companies. So you're the laborer, right? So you're coming from a household. And then land also, they were like, we are the owners of land. If you have, let's say if you have a tree that you're owning in your garden, that belongs to you. And that belongs to you means you're coming from households. So households are the ones who own the factors of production, right? So we are saying that the ones who decide related to supply of factors of production, and they are the purchasers or buyers of goods and services. They own factors of production. So as a laborer, you will go and work in a company and you will earn money. And using that money, you will actually buy goods and services. Okay, so we can say purchasers of goods and services or buyers of goods and services. And they are the basically ones who also decide how much they are going to consume and how much they are going to save. So we will keep like this. Then we come to, next one we come to governments, or we come to business firms. Let's talk about business firms. And then we'll come to governments. Actually, finish the governments. Governments. And then business firms. These are the three main important ones. There are some MCQ questions that actually ask what are the three main important elements of an economic system here. Three main are what? It's households, governments, and businesses. Okay. So we can say each and every country has this government. That's what it is. So it's a countrywide thing. Right? Having authority to rule the country. They're the ones who are voted basically. So what are their main duties if you take, right? They, let's say we can say provision of goods and services on public welfare if they're giving to people, right? They are the ones who have to decide, we'll study what this redistribution of income is, right? What they do is they take taxes from the rich, they take the taxes and they give to the poor. That is what redistribution of income means. I'm just going to put in brackets saying taxes, right? And they are the ones who have to protect the economic and personal rights. We can put that, those 4 points are in. Protect economic and personal rights. That's enough. That's a government. Then we come to business firms. What do business firms do? Mainly, right? Let's say they are these guys are the sellers, buyers of goods and services. No, these guys are the producers and sellers of goods and services. They produce and sell goods and services. To whom? To the households. Okay. So they are the ones who sell goods and services to households. We can say sell goods and services to households. And households they buy goods and services from business firms. Okay, so that's a nice circular rotation there. In chapter 5 also we'll study. We call this as the circular flow. Households buy goods and services from business firms. Business firms sell goods and services to households. And so see, if businesses want to produce goods and services, they need production. So if they need production, they need factors of production. Yes. So they buy factors of production or obtain factors of production from households. They take factors of production from households and they sell goods and services to households. Whereas households, they are the ones who own factors of production. Okay, or provide, let's say, provide factors of production to business firms, and they buy goods and services from business. Whereas these guys obtain from the households and sell to the households. Correct? No? They get factors of production and sell goods and services. These guys provide factors of production and buy goods and services. So this is what we call as circular flow. So you will have to, you can like remember this in the form of this diagram. Like this. Circular flow, factors of production. Households give factors of production to business firms. Business firms give goods and services to households. You will have to remember this, what we call as the circular flow. Okay. Put this in the next page. And lastly, I think in terms of the rest is not that important, but this part is there. They are the ones who we can say they decide basic economic problems. They take decisions on basic economic problems. Actually, governments also, in certain governments, they also take decisions on basic economic problems. We'll study this in the next section. So these are your main elements. Okay. And your sub elements are, there are labor organizations and NGOs. Those are the two sub organizations. Right. I'm just going to say labor organizations. And I'm going to say NGO. So if you can remember these points, that's basically more than enough. You don't have to memorize everything in the tube or everything in the note or whatever. This short note is good enough. Just remember 3 points for households, and maybe even these you can just leave. It's fine. Remember 3 points for government, 3 points for households, 3 points for business firms. NGOs are basically, defined group of employees, right? You can just say like that. They are a defined group of formed. Just say defined group of formed with a purpose. That's enough for any labor organizations. Like for an example, railway union will get together. The railway workers will get together and they will form a union. Why? Because they want to represent themselves as a union. So you can just say example, labor unions, factory unions, labor unions, right? These are a bunch of workers getting together and forming unions. Okay. That is to represent their rights, but to fight for their rights, basically. And finally, if you take non-governmental organizations, these are what we call as organizations not formed under the government, but with a public welfare. Their main target is public welfare. So you can say organizations not coming under governments. Their motive is basically public welfare. Like government only their motive, but they don't come under the governments, basically. Okay. So that's the summary of your economic, basically elements of economics. All right. You can take a screenshot of this as well before we move on to the next section. So you can take this. Because lastly, what we are going to take a look at is economic systems. That's the bigger part of this section. Okay, so this is over. We have done most of chapter 1's first half. What we have left now is basically to talk about the economic system. All right. And that we will cover shortly. Take a screenshot of this as well. And finish this, compile it into your short note, put it into your chapter 1 file, and then study this before you do your past papers. And that will actually help you to do your past papers faster and also better. Right? Because that's the whole point of doing this short. There's no point of doing it otherwise. All right. There you go. Fine. So now we move into the economic systems. Now simple, right? Let's keep economic systems simple. Let's not go into too much of nitty-gritties here. there are in your syllabus, we are basically going to talk about 5 different types of economic systems. Okay. What are the 5? There's something called market economy, command economy. Then there's something called mixed economy. There are 2 types of mixed economy, social market, socialist market. And then there's something called traditional economy and cultural economy. Right? For an example, Sri Lanka was always an agricultural based economy. Ara they say during Parakum Yugayak, never thought Tarambai Kila, there's a song. Parakum Yugayak, never thought Tarambai Kila. To be very honest, the Parakum Yugayak shouldn't never thought Tarambai. Because back in the day, Parakum Yuge was very focused on an agricultural based economy. We were very self-sufficient when it comes to rice. There was once upon a time where we gave rice to India and Myanmar also. So, but now rice is not the only thing, no man. Like even though y'all are called as Sotumadis, whatever, y'all don't eat only rice, no. Y'all eat everything other than rice. So if we have another Parakum Yuga, Parakumbas period, technically we won't be happy because there will only be rice. Right? Only maybe Sotumadis like y'all will be happy, but then even y'all won't be happy because y'all want burger and submarine and whatever. Y'all want a lot of other things. So traditional economy example is basically that agricultural heavy economy, which was what Sri Lanka used to be. But now we don't want that anymore because now it's all about industrial. After agricultural, it's industrial now. And third, it's about services now. Services is where you can get paid the most. Financial services are there, IT services are there, where you can sell to foreign countries and basically get a lot of money out of it. So 5 types of economic systems, out of which traditional is what it used to be. Now there's a thing called cultural economy where because of Islamic banking, Islamic finance coming in, in the Middle East and Malaysia and things like that, that is there. But other than that, right, our main focus in your syllabus is the first 3, which is the market economy, command economy, and mixed economy. Those are the 3 things. Okay. See, why have we classified this? Because end of the day, we want to answer those 3 problems, the basic economic problems of what to produce, how to produce it, and for whom to produce it. We have to solve this problem. Every country has to solve this problem. So how do we solve this problem? That is where these economic systems have come. And primarily, there are 3. One is markets, the other one is command, and the third one is mixed. Right? So we are going to look at one by one what each of these are. So if you take a look at the criteria, what is command, what is, market, and what is mixed? What is the criteria? This is basically the summary of the criteria. So we can classify saying, right, if you take a market economic system. So let me just put a table here. Market economy. What is the criteria for market economy? And then, let's put the criteria like this. Hold on. Okay, so there are 3 criteria. One is in the form of a decision coordination mechanism. The other one is in the form of ownership of property. Third one is in the form of nature of incentives. Okay, so we will say like that based on who takes the decisions. Okay, second one is based on property ownership or ownership of property or ownership of resources basically. So ownership of property, decision coordination, ownership of property, and the third one is nature of incentives. There are 3 ways in which we can break down this criteria. First and foremost, if in the decision making system, right, we can say 2 types. One is market system, market economy, also called as free economy, right, free market. And then second one is command economy. This is the first criteria. Second criteria is we have capitalist economic system and socialist economic system. That is the second criteria. And third criteria is based on something called as material, coercive, and moral. Material, coercive, moral. We'll talk about each of these one by one. I just want you to remember for now, if it is a decision coordination mechanism, this is about who makes the decisions. Okay. We say that in a market economy, it is the price mechanism that makes the decision. We'll come to what this means. Price mechanism means what? In a command economy, it is the centralized planning. We'll again come back to that. Centralized planning. So this is about price mechanism. This is about centralized planning. And then this is about private sector owning property. This is about government sector owning property. And then what is your material? Material is about profit motive. And here we have said coercive is about seen within a command economic scale. I'm just going to say based on force. All right. And moral is based on right decisions. Morality. Right decisions and right actions. Let me quickly explain what each of these means. This is based on profit motive. This is based on force, and this is based on value. I'll quickly explain what this is, the nature of incentives parts. Okay, that is not that important, so you can just follow. Nature of incentives got the thing, right? See, if we want to make you study, there are three ways in which we can make you study. What are the three ways? We can first and foremost tell you, okay, if you study, we will give you money, or we will buy some sort of a computer like that and give you, or we will buy something and give. That's how basically how my father made me study, to be honest. From the time we were in small grade, he will bribe basically. He will be like, you come first in the class, I will give you like, like a, like some sort of a books or whatever. Then you come first in grade 5, he said, come first in scholarship and all, right? I will give you a bike. I think he's been bribing me for a while to study. I mean, it has worked. Thank God I studied, and today I'm in a good position because of that. So technically, then these bribes work. That is what we call as material, where you're basically doing it for some sort of a like a motive, like profit motive, right? So most economic systems, this market economic system, capitalist economic systems are all profit motive economic systems, basically. Okay. Whereas coercive means if you don't do, we will hammer the shit out of you. That one. So he has used that also. He has like when I became a bit bigger and all, grade 8, 9 and I got a product, you don't start, you just stop studying during that time. Ethokota has been like, I'll come to the teachers, what is that parent teachers meeting and smack the shit out of you and all of that. So that is basically the coercive, like how we take those Ashlon butters and start hammering the shit out of you all in class. That part, right? I know corporal punishments is not allowed, but it's okay. You can go to animal rights. I'm sure they won't stand for you, but you can try. Okay. And then moral means that's the worst actually, right? Sitting down and giving you a banner as to like if you study, it's good for you, and how they studied, how they got up early in the morning, and like now for an example, if I'm advising you, I'll be like, when during those days when we had to go to school, we had to wake up in the morning, milk the cow and then collect the eggs and then sell the eggs and then sell the cow and then sell the milk, and then only we had to go to school. And by the time we go to school, teachers will scold, not knowing how poor we are, and then we have to go through like forests and wade through rivers and swim through rivers, and then only we get to go to school. You all are actually having school in your house itself. All this bullshit that parents tell for years and years, whatever their grandparents tell them, they are telling us. So basically, we will continue this tradition of telling that to our next generation also. We won't even know what a jungle is, but at least, right? Okay. Okay. So, yes, that is the morality part, where we sit you down and give you a long ass banner on how you should improve in life. But obviously, you take it from one ear and you put it out. Anyways, that's how you all are. Like when you all go to this mosque, and then the imam gives you a banner about how you have to be good and all, and then you're like, okay, I'm gonna be good, I'm gonna be good. And then right outside you come to the bus stop, you see some like a girl or whatever, and all that banner is forgotten. So moral doesn't technically work. Think about it. So profit motive Gatot, what are these economies that function on the profit motive? Basically the market economy. Force nang command economy. Morality nang, I think I guess the cultural one kind of like works on the morality part, right? And maybe traditional to a certain extent. But mainly these two are done on command and markets. That's how, basically these two come. Okay. There was a comment saying, okay. This households, okay, may point, this says provide owners of factors. Yeah. Remove the owners part, you can just say provide factors of production or owners of factors of production. Let's just keep the owners part. Owners of factors of production. Remove the provide. Take a screenshot of this. I just made a small edit in the households part. So they are the owners of factors of production and they buy goods and services. These guys obtain factors of production and sell goods and services. Okay. Fine. You can, that is done. So you can go back to this one. So now what is your market economic system and what is your command economic system? And then what is capitalism versus socialism? That's basically what we're going to come to next. Command economies, well, basic characteristics you all should know. So under command economies, we'll list down 5 basic characteristics. Under market economies also, we will list down 5 basic characteristics, right? Basically, in a market economy, if you say, there's also another word for it called laissez-faire. Some exams ask that. It is also called as free market. It's also called as capitalists, right? Can also be called as laissez-faire. Basically, these are the main characteristics, right? You have to have private ownership of property. So if we ask you for the main basic characteristics, you have to first and foremost say, right? Decision based on price mechanism. That's the first one. Decision based on price mechanism. I will explain what price mechanism means. Okay. And then you can also say the second one is private ownership of property. Because command market economic system goes hand in hand with the capitalist society system. Capitalist system means private ownership of property. Again, a private sector owns the property. In countries like America and all, most of the property is privately owned. Like in Texas and all, if you go out now, see, go out of Colombo, right? You'll have gone out of Colombo, right? On the way to like Puttalam and Jaffna and Morali and all, you have a lot of on the sides of the road, you have a lot of empty land, no, empty like forests are there, like trees are there. There are houses other than those, like empty land. Now, most of those land is actually owned by the government. In Sri Lanka, it's actually owned by the government. You can't just go and buy those also. You have to figure it out who owns it, and then government owns it and buy it from the government if you're buying. In America, UK and all, especially in America, in the Texas and all, when you go out, there'll be like massive amounts of land, which is like empty. Most of those are privates. There are people owning those from back in the day. So that's the primary difference between this capitalist and socialist society system. There are government owns most of the property, all the property basically in a socialist system. In a capitalist system, it's the private sector who owns, like the normal people, right? So here, private ownership of property. Decision based on price mechanism, private ownership of property, which is the capitalist system where we are saying. And then you can also say the main motive is the profit motive. Based on profit incentive or profit motive. These are 3 of the main points when it comes to the market economic system. There are questions that directly come from this. And then if you want, you can basically include some of the other characteristics. What are the other characteristics? You can say characteristics. You can say basically freedom of choice or free entrepreneurship. Competition will be there. You can say competitive market, free entrepreneurship. I'll explain what this means. Entrepreneurship, right? And then you can say freedom of choice is there, consumer sovereignty is there. Those are the main things, I guess. The free entrepreneurship, social welfare is neglected. And you can also talk about consumer sovereignty. What do you mean by consumer sovereignty? Who is the consumer? We are the consumers. We get to decide what we want to do. In a market economic system, we can decide. We don't have to wait. We don't have to listen to the government or anything. As long as you have money, factor income, you get to decide. And then if you want to come up with a new business on your own, you can. You don't have to get permission from the government, or you don't have to work with the government. You can open your own business. You can open a Sattikade outside or Muttikade outside, no problem. Right? Nobody cares about social welfare. Everybody is about profit. No, so who the hell cares about the poor bugger? Let him die if you want. We will talk about only profit. That is what market economic system is about. So competitive market means there are so many competitors. So basically all of these things will be there. And you can also put limited government role. Government role is very limited. Right? Where fully it's a market economic system. Price mechanism, I will explain this last. We can come to that last. Command economic system, well, the main thing is the opposite of this. So command economic system, well, there is no such thing as price mechanism. I'll talk about what that is. Here we call something as centralized planning. What is centralized planning? Government gets together, all the ministers, everybody gets together. They decide what the country is going to be like for the next 5 years, for the next 10 years. China used to be a full command economic system. So go and check every 5 years, there's a 5-year plan they put. What to produce, how to produce, for whom to produce, how to allocate the resources. They do this, right? So that is what a command economic system. This centralized planning is done by the government. So is there private ownership of property? Mainly the government ownership of property is only that, which is the socialist system. That is why these two go hand in hand. Government ownership of property, and then except labor. Labor, yeah, we have to say that, except labor, because labor, people can't own the people, no. Government can't own the people, no. Right? So based on public welfare means social welfare, like a looking after the public kind of thing. And then other characteristics, if you take, right, it's based on social welfare, public being. See, what are the disadvantages in a command economic system is all these advantages in the market, those are the disadvantages. So let's say these are the advantages. Let me change this. I'll give you advantages in the market. So competitive market, more choice, more free entrepreneurship, all these. What are the disadvantages in a market economic system? Main disadvantage is first and foremost, social welfare is neglected and the limited role is there for government. So nobody cares about the society, right? Nobody cares, and the government also doesn't have a lot of power. So these are main 3 advantages, main 2 disadvantages. Then we will say advantages are social welfare is priority, right? Like poor people, that concept of poor people won't be there. Everybody is looked after, right? And government has the power. Those are the advantages. So social welfare is good. But disadvantages is limited choice or no choice for consumers at all. If they say you have to wear, you have to wear. If the public, if the government decides red the hat only you have to wear, red the hat only you have to wear. There won't be anything else. For the females, it will be sarana, and then women, if it's red the hat, then you have to wear that only. So limited choice for consumers, right? Very less competition, right? There'll be limited competition also, right? And basically, we will add some more down the line for this as well. But these are some of the main disadvantages that are going to be there. Consumer sovereignty won't be there. You can write whatever they've written, the opposite of that. Entrepreneurship is not there. Consumer sovereignty won't be there. There won't be, competitive market won't be there. But only thing is social welfare will be priority. So poor people, like everybody will be equal. That kind of advantage is only there. So, Okay, understood. Environmental degradation, of course, can come for both end of the day, because to be honest, none of them care about him. That's the truth, right? So it's a disadvantage for both end of the day. But here I'm just talking about primarily only the main ones. You can also talk about collapse of quality control. Yeah, that is an important part as well. Again, the quality, because now anyway you're basically going to get it, so you can put that. Nobody will care about the quality. So this is your command economic system. This is your market economic system. To be very honest, in today's world, okay, there are no countries that are 100% market economic system or 100% command. Those days, America used to be 100% market economic system, and Russia and China and Cuba, they used to be 100% command economic system. It was capitalism versus socialism. Capitalism is America, socialism is Russia, and followed by China. But the truth about that is none of these economic systems are perfect. They have their own advantages and disadvantages on both the sides, end of the day. Okay. So then that is where it gave birth to something what we call as the mixed economic system, where we have both aspects. It's a mixed thing. So then we have something called as social market, and then we have something called socialist markets. Okay. For two things. I think I've given the examples here as well. Yeah. Sri Lanka is also like that. So now what is this? Social market means capitalism. Primarily capitalism because resources are owned by the private sector. Main thing is capitalism and market economy. It's a more of a market economic system, but there is government intervention also, because then that advantage of both is there. This one is mainly market, mainly private sector owns everything. So mainly market and capitalist. But because now disadvantage is social welfare is neglected, government has a limited role. That disadvantage pass karanda, they have brought government intervention also will be there. So America is now this. Most of the Western countries, if you take, it's a social market system. But the government has a lot of power. They can intervene in a lot of areas. But primarily it's a capitalism plus market system mainly. With more of government intervention also. That is the social market. Socialist market is the other way around, where in the command system we said it's the socialism is the government sector owns property. So here most of the resources are owned by, or predominantly majority portion of the resources are owned by the state sector, right? But private sector is allowed to do entrepreneurship, to do, provide goods and services. They are also allowed to actually come up with production, factors of production, ownership and all that. So Sri Lanka is also a socialist market actually. Just like China, Hungary, Bulgaria and all. Because why? Because if you take ours also, like if you take energy, take a lot of land outside of Colombo also, there's so much of land that's owned by the government, most of it. And then like some of our main sectors, like for an example, the railways, transportation basically. So railways and then energy, like water, electricity, and then schools, and then healthcare. Most of this is government is only the majority. Schools, if you take government schools only move, private schools are less, no man, right? And then if you take healthcare also, government hospital only move. Private hospital is less, actually, right? And then if you take transportation, public buses, government train is like fully public, actually, fully government. Electricity is fully government, water is fully government. Like okay, like but nobody cares, right? So we are also a socialist market, more or less. Social market is the other way around. So, like think of it this way. Let me put it here. This is social market. Market plus capitalism plus government intervention. You can remember it like that. It has the market, free market or the market system plus capitalism plus government intervention. So it is more towards the market, but the advantage of government intervention is also there. Whereas if you take socialist market, there we are talking mainly about command plus socialism. But the private sectors, this one, the limited choice is there, limited competition and all of that. So private sector is actually allowed to come in and do the price mechanism part. Right, in terms of the private sectors, in terms of their entrepreneurship and all of those things. So decisions related to resource usage is taken by the private sector. Let me say price mechanism. Price mechanism is allowed. I think that is the sort of summary you should remember when it comes to this section. Oops. Understands? So that is basically how the economic systems work. So you have your types and you have your criteria. Can you take a screenshot? Take a screenshot of this one, classification of economic systems and criteria. So this is the most important thing for you to remember. There are a lot of questions that come from this section. Take a screenshot of this. And then you have your, so types, you have your criteria both. And then basically you have your market economic system, command economic system summary. These are the most important points for you to remember. Advantages, disadvantages also I have given. You can add anything to this. You add more points by like looking at short, like past papers and all might give you more points. So you can add those also. That's a good enough list for you to by heart and keep, or remember and keep. This short note is enough for you to tackle those questions. You always see a lot of questions coming from it, right? And then the mixed economic system, if you take, this is the summary of the mixed. So you can take a screenshot of this as well. Next, we are going to look at what is price mechanism. And then finally, we'll look at a couple of other important sections also. You can take a screenshot of this as well. Yeah, North Korea used to be command. Actually, I think North Korea is there. If you take the command economic system, well, the country that has the most amount of command economic system socialism, that is now North Korea. But to be honest, North Korea also has price mechanism. Again, they have shops and there are entrepreneurship is allowed. Only thing is they have to put that Kim Jong-un's picture in the bathroom and everywhere, all and everywhere, and wherever they go, they salute the bugger, even before they take a shit also, I guess. But technically, other than that, it's allowed. It's allowed to do entrepreneurship and also they are also a socialist market. Ari? Fine. So see, there was this question. I think there's this question basically, right? State, like, so there is a list of these are the common questions that come from this section actually. And then if you take state 4 example of economic activities that support the view that Sri Lanka is a mixed economy. So we can actually argue that Sri Lanka is a socialist market. And I told you the list of things, right? Government owns a lot of property, all these the main important essentials in the company are all state owned, like transportation, energy utility, electricity, water, healthcare, education. These are all examples you can give saying Sri Lanka is actually, we are called Democratic Socialist Republic of Sri Lanka. That's what we are called. Yes, that's our name. So we have socialism right there inside. So we are a mixed. Now we are a mixed. Okay, so we'll come back to this. Next one. So you have this one done. Lastly, what we have to study is duty of an economic system. So what are those criteria that each of these economic systems have to fulfill? Right, that is this. So there's a list for this actually. This is the list. I'll just put this list directly here itself. So what are the ways or what are the things an economic system has to do, right? If they don't do these things, then, technically we can say that that economic system has failed. Okay. So that is this. These are the things. So full employment, providing employment opportunities to everybody. Economic efficiency, like in PPC, in the next section, we will learn there are two types of economic efficiencies. One is productive efficiency, and the second one is allocative efficiency. So we'll come to that. We'll learn that in the PPC part. Economy has to grow, right? Every year there has to be some sort of GDP growth. So I will add these words here: GDP growth, right? Full employment. This is measured in the form of the unemployment, employment versus unemployment, right? We will keep it as it is. This is GDP growth. Price stability means we have to keep inflation at a low single digits. We'll talk about this in, down the line in chapter 7, we will talk. I'm just adding some additional points to each of these. Here GDP growth. Fair distribution of income means taxing the rich. Taxation systems, right? Taxing the rich and giving to the poor. Economic external stability is in the form of your relationship with the foreign other countries, the loans, the cash flows that are happening, balance of payments, those things. We'll talk about it down the line. Quality of environment and economic freedom in the form of free entrepreneurship and things like that. So I think this is the list. You can just remember maybe 3 points from this. Main first 5 points you can remember. That's more than enough. The rest will come back to this later. So that's more or less it. The first half of economics is about this. The only thing that we are left to talk about, the most important area, is what we call as the price mechanism. So there are questions that can come from this also. Price mechanism, I'll quickly cover in 5 minutes what this is. It has 3 functions. You have your signaling function, your incentive function, and your rationing function here. Right? So I've given like a definition for each of these, and then I have also given this diagram for you to remember. Let me explain very quickly what this is, and then you can take a screenshot of this as well. I gave this as a note in your, for those of you who came to the class, I gave this as a note. So, yeah, so I'll just quickly explain what this is. I mean, if you have this note, you don't have to probably draw it again because the note is there. So you can leave it as it is. Let's say like this. So you can say change in price. It's a signal to customer and supplier. That's the first one. That is the signaling function. Okay. Signal toothpaste name. It provides a signal. Let me put this in the form of a table. So then it's already there in the tube, so you can just remember it like this. Signaling function means change in price. Act as a signal to customers and also suppliers, producers. Okay, that's your signaling function. Then you have your incentive function. So let's say increase in price. That's easier to explain. Increase in price acts as a signal to customers and suppliers. That's the first one. So if the price increases, what will happen to customers? Price increases means, what do you think? If the price of a product increases, think of it this way. Nothing more need to draw this basically, but let's explain it in text itself. Let's say you're talking about a phone, right? Or some sort of, let's say, like a vehicle or something. Let's say car will you, all these BYDs and all these things that are coming out. Okay. Let's say the price of a good is increasing. Earlier, let's say the price of the good was 100,000 or something. Now it's 250,000 or something. How will the customers react? And how will the businesses react? There are two ways in which each of these will react. Like car is a bit difficult to explain. So let's go with a phone, Samsung phone or something. That was actually the example that I had given there. So those of you who have the note, you don't have to put the note again. It's a double word for all, right? So if you don't have it, you can put it. So price, let's say the Samsung price from 100,000 rupees, it's going up to 120,000 rupees, let's say. So this is the signal part. Whenever the prices are increasing, we say according to the price mechanism, it will provide a signal to the customer also, saying, here the price is going up, and then it will also provide a signal to the supplier also. They're saying, hey, hi, the price is going up. This is the signaling function we are talking about. Okay. So then incentive function means how will the customers or the suppliers react? If the price goes up, customers demand, okay, the demand will actually come down. because end of the day it's becoming too expensive. Not everybody will be able to buy it at 120,000 now because it's becoming more expensive. Demand will actually come down. They might actually buy something else. But what about the suppliers? Suppliers will actually like it. When the price is going up, they'll be like, ah, more profit for us, Kiela. These guys will actually increase the supply. See what's happening now. When the prices increase like this, demand is actually coming down because customers don't want to buy it anymore. But suppliers are probably increasing the supply. Why? Because for them, this is a good thing. So when the price increases, right? So price increases, how do customers react? From the customer side, demand will decrease. Okay. Whereas from the supplier side, they will actually increase the supply. Supply will increase. This is what we call as the incentive function. And price decrease is the other way around. Okay. So incentive function, what is the, so here what is the signal? Here the increase, the price increase in price is the signal. Then what is the incentive? After the signal comes. So this is the signal. This is acts as a signal to customers and suppliers. After this signal comes in, right? How do they react? Reaction from customers and suppliers. That is basically your incentive function. So customers will decrease demand, suppliers will actually increase demand. Instead of calling it as customers, they're called as consumers. Right? Demand will decrease and supply will increase. Okay. So reaction is basically the incentive function, right? And then lastly, so this is signaling function. Then we have the incentive function. Finally, we have the rationing function. See, rationing function, now let's see, look at this example once again. Price of this phone has increased. Therefore, consumer is actually reducing the demand. Okay. Whereas producer is actually increasing the supply. You all can take a screenshot of this for people who don't have this note, right? Supplier is actually increasing the supply. So then what happens is demand is decreasing, supply is increasing. Is that that is a big problem in the market right now, because we have something called, in chapter 2 we will learn, we have something called market equilibrium, where demand and supply have to be equal in the market. Then only market becomes equilibrium. Okay. So market equilibrium means demand is equal to supply. But now is demand equal to supply? No, demand is coming down, supply is going up. People don't want to buy, but there are more and more goods that are coming into the market. The market goes into disequilibrium. So the disequilibrium breaks. Demand supply breaks, demand comes down, supply goes up, market goes into a disequilibrium. Understand? So the moment that happens, right, price mechanism, what we learn is, if the market goes into disequilibrium, now think, there is a lot of phones in the market. Lot of. Nobody wants to buy because it's expensive. If they want to sell these phones, what will automatically happen? Automatically, because the market is in disequilibrium right now, because now the supply, there are so many phones, nobody wants to buy also because it's expensive. Automatically, the price will start coming down. Price will start reducing. That is basically what we call as the rationing function, where we say market price of this product will change, will start reducing, because there are too many products. No, now nobody wants to buy it. Too many products can, automatically the price will start reducing. That is what we call as the demand and supply dynamics. The price mechanism is basically what regulates this, basically. In the sense, regulates in a way. To be honest, nobody is coming and saying increase the price, decrease the price. But based on the demand from the consumer and based on the supply from the producer, the market price changes. So in a command economy, government decides the market price. In a market economy, price mechanism decides the price. That's the difference. Understand? So coming back to the short notes, we are going to say rationing function. Well, so now we know that an increase in price has actually gotten a reaction from the customers. Demand has gone up. Sorry, demand has decreased. and supply has increased or something like that. That's been basically a reaction. And because of this now, right, what happens? Demand is decreasing, supply is increasing. This leads into market disequilibrium. And now that the market disequilibrium has happened, the market price of the product will go down. Price of product will decrease to bring back equilibrium, to bring equilibrium. This decrease in the price of the product is basically what we call as the what? The ration. So this is the three examples, the three steps of the price mechanism. You have your signaling function, you have your incentive function, and you have a rationing function. Whatever I put it in red color, that is basically this increase in price here. This is the signal. Here, reaction from customers is basically the incentive part. And the price reduction to bring back to equilibrium, that is the rationing part. Okay. So that is basically your price mechanism. You can take a screenshot of this table also. For those of you who have the picture, you all can just remember this part, the price mechanism part. Yeah. Will there be an instance where demand will be high? So the other way around can happen. No, there can be a decrease in price. If the decrease in price happens, what will happen? Customers' demand will go up. Supply will come down. Right? So then the other way around goes basically. So demand will go up, supply will come down, right? So we are decreasing price, no? So automatically then what will happen? For it to come back to equilibrium, the price will increase. The exact opposite of this. That is also possible. Both ways are possible. Okay. So we'll talk about this in detail in chapter 2. Right? Because these are like things that happen over like, short period of time. And when they realize there's nobody who's going to buy it, then the price of the product will decrease. That's basically what happens. In chapter 2, the first part is demand, second part is supply, third part is equilibrium. There only we will learn exactly how this happens, especially in the equilibrium part only we'll learn. Last Senator, you all will see when the demand increases, price is going up, supply increases, price is coming down. Like that you all will see. But for now, just remember what this section is, because in chapter 1, it's more of a theory part. In chapter 2, we will learn the, learn the concepts, right? So how will market equilibrium come back? Because price of the product will decrease, no? If the price of the product will decrease, people will start buying again and supply. That demand and supply dynamics will come back to normal. Again, like I said, this is more detailed in chapter 2. So just remember the three functions, equilibrium part, the demand part, supply part. We will look at it in detail when it comes to chapter 2, right? When the price increases, decreases, that dynamics always keeps changing, the demand and supply. So we'll talk about it now. Okay, so the last part is the last screenshot. This, of course, I gave as a note as well. So people who have this note, you don't have to write it down. But most of the time in this area, the question that comes is this one, where they ask, in terms of the basic economic problems, how do the three types of economies solve this here? Right? So how does a market economy solve the basic economic problems? How does a command economy solve the basic economic problems? And how does the mixed economy solve this? So if that question comes, this is basically the full-fledged summary of that section. So this, of course, if it's there in your note, try to put a short form of it in the short note. Or ideally, this should be in the short note because this is the most important thing. So let me summarize this so that you can put it in the short note. This is the problem of resource allocation, problem of production, and problem of the three basic economic problems, right? In terms of the distribution and whatever. So how does the market economy decide what to produce? They don't like command economy goes based on the requirement of society. Right? The government only decides. Society is required. Decided by whom? The government. That is the command economy. These guys go with price mechanism, demand and supply. If the customers want it, we will give it. demand and supply. Price mechanism means demand and supply, right? But command economy is about society's requirement and public welfare. So mixed economy, of course, depends. Private sector will go for price mechanism. Public government sector will go for planned mechanism. They will go for public welfare, society, social welfare, right? Whereas private sector will go for demand and supply. So that is the summary there, what to produce and in what quantity. I'll just say what to produce. Right, that's the summary for that one. And then how to produce, as far as how to produce is concerned, market economy will always be about profit maximization, right? Or we can say based on profitability. They are always about how can we maximize profits. So this is about profit maximization. If we can use machines and if we can get the highest profit, we will use machines. That is what market economy says, right? If we can use labor and get the highest profit, we will go with labor. Anything is okay as far as labor or capital, no problem. Labor or capital is okay. As long as whichever gives us the profit, we will go there. That is about marketing. Okay. Whereas command economy says they are not worried about profit maximization. For them, social welfare is only more important. So they give priority to labor. More priority is given to labor. Okay. And mixed economies, well, private sector, they will go for profitability. Government sector, they will go for social welfare. So for them, it's mixed. Now in Sri Lanka, it's mixed, right? Private sector and government sector. So private sector here goes for price mechanism. And GOV sector here goes for planned mechanism or social mechanism. Here the private sector will go for profitability and the government sector will go for social welfare. So this is a good summary for you all also. Put it in the short note table. For whom to produce here depends on primarily on factor income. It's all about factor income. Do you have more money? We will give. You don't have money? Don't. For whom to produce is on dependent on factor income. Here it's once again about the social welfare. It's not about, whether who has the money or not. There's a society needed, they will go for that, right? But again, in a mixed economy, it's the both. Private sector will go for factor income, government sector will go for social welfare. That's basically the summary of this section actually. That's good. Neva, we can talk about this in later part of the chapter, but this is your summary as far as your basic economic problems are concerned and how each of the markets solve. So you can take a screenshot of this and you can add that to the short note as well. Okay. So we've covered the first part of economics in the first video, second part of, the basic chapter 1 in the second video. And now we have to cover the third part. Third part is basically the PPC part, right? That is again, maybe the third part of the video for chapter 1. So with these three, the short note for chapter 1 actually comes to an end, right? So make sure you put these short notes, because end of the day, like I said, tute and notes are way too long for you to memorize and study, right? But what you can use for your past papers is these short notes. As long as you can have the short notes and as long as you can put it up and use that for the past papers, at least if you can keep that in mind, you will be able to score most of your marks, because pretty much most of what we have discussed comes in the past papers anyway. Okay. So this video concludes, and then next video will focus on the PPs. Thank you. Right. So, I told it as a video because then I can cut it and I can put it as a video for future use. PPC, as you can see, we don't have enough time to cover PPC. PPC requires at least 1 more hour. There are a lot of, drawings to do. So I think that's good enough. We've covered the first part of, I think, short notes. Short notes for chapter 1 is a bit longer, but I think there's a 1.5 hour, 1 hour short note for the first video and another 1 hour short note for the second part of chapter 1. And then we can do another 1 hour video basically for the third part of chapter 1. So PPC, there's not enough time to cover. It's 10 o'clock. I don't want to take it till 11 today. But we will do another webinar next week, right? Keep your eye on the channel. I might do it on Thursday night actually, not Friday. Just check it. We will do another webinar where we cover PPC separately. And then once that is done, the chapter 1 is over, right? And then we can talk a little bit about chapter 2 for the A-level 26ers. But we have one more webinar coming up. Okay, so keep an eye on the channel and we will go back to it. Any questions, guys? All okay? You want me to show the tute? Yes, I'll do that. There you go. Tute, of course. Okay, so you can come back. For those of you who need the tute part, you can ask me for the recording. And then maybe you can go. So the last part of the tute has this. So I'm going to scroll slowly so that you can go to the last part of the recording and you can basically slowly fill your tute. Students who are coming for the classes, I will upload the full version of the tute to the classroom. So this full version of the tute will be in the classroom. You can check those, right? You don't have to take the recording and go through like this. But people who are not, you can actually take the recording. So this part is there. And then this part doesn't have anything to write. This part has something to write. This. And then this part is there. This part is there. This one. This one. You have your system. So you have this. And then you have this. And you have this. For the recording, you send me a WhatsApp message, I will send it to you. Okay. The video for this will be uploaded later down the line. Listen, so we have started the past papers. Paper 2 questions have already started. I will give you some videos for that as well. Maintain a separate file for chapter 1. And in that file only, all these things have to go. So put the short note now itself and keep. And you all can also see that the WhatsApp also started, so make sure you get used to those. Put the short note and keep so that you can use that study. Okay, so today we will end this webinar with this part, and in the next webinar we will cover the PPC part. Just keep an eye on the channel. We will put that there. All right. Take care. Bye bye and God bless. Good night.